I'm buying an
Yes.
exchange traded fund, ticker JEPI. And this is it pays a monthly dividend over 9%, and that's pretty substantial. And you get paid monthly on it here. I think it's a nice place to put cash right now in an environment where it's kind of difficult to figure out what's going on. But the bigger picture is not is really looking at the end game. What do we know is going on? It's very simple. We have swelling global debt. It's ballooning, and it will continue to balloon until we get a bursting of that debt bubble, the debt market hyper bubble, which is being fueled by design. The larger they can make the global debt bubble, the bigger the bang when it eventually bursts. And we witnessed it. We witnessed some of it when we had that uncontrolled sell-off in that 10-year yield. And then, of course, central banks got in here and started managing the yield curve more so than they were already here. And they're going to continue to do that. But it doesn't come without a cost. The cost here is more inflation, quite obviously. So what people need to do, look, not everyone has the ability or maybe even should be in an exchange traded fund or in the stock market. What people need to do, in my view, is realize that we're in this environment of swelling debt here and just take the opposite side of that trade. That is being real things. I've been explaining to people since I started well over a decade ago to hold hard assets, physical silver, my favorite asset of all time, physical gold here, because eventually how I see this playing out, it should make sense to people. Let's put this together real quick. If just to clarify, eventually we're going to get a meltdown in the debt market, and this is not going to be by accident. It's being fueled by design. What I mean by a meltdown in the debt market is an uncontrolled spike in bond yields. Okay, and what that's going to do is exert pressure on the stock market, the complete opposite of what we've been witnessing since the meltdown of 2008. So if you get an uncontrolled sell-off in the debt market, you'll see yields spike very rapidly, like we witnessed with the 10-year yield, 60 basis points in like 2 days. Okay, and what's going to happen is that'll put pressure on the stock market, and cash is just going to move into other assets. It doesn't go to money heaven. Cash moves from one set of assets into another set of assets. And in my opinion, gauging from this scenario, it should be pretty easy to understand. A sell-off in the debt market will precede a sell-off in the stock market. You have to understand too, the debt market is the driver of everything, even the stock market. The stock market itself is a derivative as to what's going on here, as everything prices off of what's happening in the debt market, which is the largest aspect of the market altogether. Okay, so by understanding that, we can pretty much understand where other assets are going to go. When we get that implosion in the debt market, stocks will sell off, and cash is just going to move into, I believe, into commodities. And I think the most suppressed asset in the history of the world is silver. In a real market, it should be the actual asset that determines value of a derivative. And a derivative is something that derives value from an underlying asset. How the market is set up right now is the derivative is dictating the price of the physical asset. This is set up, obviously, to keep the price of precious metals suppressed. Now, good. I say let them play their game. I've been telling people this for the longest time, and it's not just this is an inflation hedge here. What people need to think about here is the bigger picture. Again, the macro picture is right now the environment remains risk on. The S&P 500 isn't even in bear market territory anymore. We came out of bear market territory just a couple of days ago. Is it going to stay that way? Who knows? Central banks have unlimited firepower, but at a cost. Higher inflation. So again, going back to my end game scenario, which is the meltdown in the debt market, puts pressure on the stock market, and cash moves from risk on, meaning equities, into risk off, commodities. And I think commodities across the board have the potential to balloon. And I mean probably go up exponentially from where we are now. And because everyone's going to rush to the door at the same time, it's always the same story, and everyone's going to want to hold these assets at the same time too. So use right now the game that's being played by banks like JP Morgan, none more so, to keep the price of gold and silver suppressed. So that's the story. That's how I see it going on. These big institutions, you know, they can pretty much do whatever they want at this particular time. But I think what they're doing here, what do we know is going on? It's always about what we know. I believe that people that really understand the system, especially the wealthy here, believe me, they're not just all in cash. These people, most of them, anyone that I know that has any kind of net worth here, unfortunately, most people in this country do not have a net worth. They're in the negative if they zero out what they owe. But people with a positive net worth, I would say every single one of these people that I know already has a nice stash of physical gold and maybe more so physical silver as well, platinum and palladium. I think all of these things. So look, everyone's who understands what's happening at least should realize that this global debt issue is it's not sustainable, nor is it meant to be. They need to, and they will, bring the global financial system to its knees to institute that new system we were speaking about just a little while ago of maximum control. But understanding, again, the scenario, implosion in debt market, stock market melts down, cash moves into commodities. That's eventually how it's going to happen. And take advantage of the price rigging. Look, everybody knows it. Like you said, it's on the front page of every freaking mainstream media outlet. Oh, this bank has been caught spoofing metals. Oh, this bank has got caught rigging this. It's everywhere. It's common knowledge. But even, look, even the commodities exchange realizes it's going on. And, sure, these banks, they're blameless. Oh, we're going to pay a fine, but we're not going to admit to any wrongdoing. This is the same scenario over and over again. Or maybe they get some low-level flunky, to take the heat. But understanding the mechanism, I think, should be very, very simple to realize, at least how I believe it's going to play out. I can't see it happening another way. You don't want to be in cash at all. I mean, if you have that power to be in as little actual cash as possible, look, what do we got? We got a dollar here whose relative strength or comparative strength it continues to gain in this environment here because the dollar still remains the prettiest lady at the ball. But the fact of the matter is the dollar's absolute strength or its purchasing power is dissolving. So why would anyone want to be staying in a dissolving asset? I think you got to be nuts. You got to find ways at least to make your cash grow. And henceforth, why? I've been putting a lot of cash to work in JEPI, which pays a big fat monthly dividend. So, and also it gives you exposure to the market. I'm not telling anyone to buy this. I'm an open book. I tell everyone what I'm doing. Right or wrong, I've made a lot of bad calls as of late trying to get my head around this crazy market. I understand that. But, that's the way it is. For years and years and years, we've all done really, really well. And once in a while, you got to take a step back from all this, and that's fine. I also feel, look, and I'm going to say this, I'm probably going to get heat for it. I believe, like, for example, the beating that we've seen lately in cryptocurrencies, I really feel that this is a place to be. I actually exited all of my crypto positions several weeks ago. I announced this publicly. I will be getting back in here. About 4 days ago, I had explained it looked like a good buying point for Bitcoin, and since that time, it's taken off. And I think there's a lot more upside here. But I want people to don't listen to a thing that Greg Mannarino says. I want people to do their own research, okay? Everything I said here in this interview here, I want people to think about it, ponder it, do your own research, and then act accordingly. That's it. I'm just a guy out here with an opinion, and I want people to come up with their own conclusions. I'm planning on doing this. I'm planning on getting back in by buying Bitcoin. Bitcoin's the mommy. It's the mother of them all. I'm not saying it's the best or the worst. It's just one of many cryptos that people can expose themselves to. But again, this goes back to what I said. Do your own research on these things here as a way to, look, people got to get over the get-rich-quick schemes. And a lot of people get caught up in those kind of things. Oh, I'm going to buy Bitcoin at 24,000. It's going to go to 50,000. It very well may do that. It may go much higher than that. Some of my closest friends who are heavily into cryptocurrencies believe that Bitcoin $100,000 or even $250,000 is within reach and reality. Me, I don't think of it that way. I look at it as, okay, is this a place where I'd want to put my cash back to work in an environment where I believe we're going to get a meltdown in that debt market? Is cash going to move into cryptocurrencies during that meltdown, which will occur, and I believe it firmly will, in the debt market, putting pressure on the stock market, going into commodities? I also believe it's going to go into cryptocurrencies as well. I've never deviated from that. I needed personally to take a step back from this market. I dumped not just my crypto positions, but I dumped my stock positions too. I got myself caught up in a bad kind of a loop for a while, and I was like, you know what? It's time to step out of the markets, all of it. Try to get a perspective on it again, regroup, and move forward. That's right now, like I said, I'm doing a lot of buying in JEPI, which pays that big fat dividend, until I can get myself back together again. I don't think it's a bad idea right now, and I said this several days ago. I said it looked like a good buying point for Bitcoin, and it has done well since that time. Look, the bottom line for people is pretty simple. They have to find what works for them. There's a lot of people that don't want anything to do with a cryptocurrency at all. They believe it's going to zero, whatever, and they're entitled to their own opinion. And they, for all we know, they may be correct. But what people need to understand is the biggest thing that I look at is the eventual, again, implosion of the debt bubble.